I'm Ellis Martin. Join me now for a conversation with Jordan Trimble, the President and Chief Executive Officer of Skyharbour Resources, trading as SYH on the TSX Venture Exchange and SYHBF on the OTCQB in the U.S. Skyharbour Resources is a preeminent uranium and thorium exploration company with projects located in the prolific Athabasca Basin of Saskatchewan, Canada, which was ranked as the best mining jurisdiction to work in globally by the Fraser Institute in 2017. The company has been acquiring top-tier exploration projects at attractive valuations, culminating in 5 uranium properties totaling approximately 200,000 hectares throughout the basin. In July 2016, Skyharbour secured an option from Denison Mines to acquire a 100% interest in the Moore Uranium Project, now the flagship project, which hosts a high-grade Maverick Zone. The company is run by a strong management and geological team who are major shareholders with extensive capital markets experience as well as focused uranium exploration expertise in the basin. Jordan, welcome back to the program.
Thanks for having me.
If you don't mind, give our audience an overview of the company.
Sure. So Skyharbour is a high-grade uranium exploration and early-stage development company. All of our projects are in northern Saskatchewan in what's called the Athabasca Basin. It's the highest-grade depository of uranium in the world. Notable companies that operate there like Cameco, like NextGen Fission, which just in recent years have made significant new high-grade discoveries. They've created a lot of value for their shareholders. And then a handful of junior companies, exploration companies, Skyharbour included. It's an area of the world, a jurisdiction that's ranked in the top 5 consistently as top mining jurisdictions to operate in, good infrastructure, lots of exploration and discovery potential. So it's a great place to be. We've spent the last 5 or 6 years now building a project portfolio consisting of projects that range from earlier stage, more grassroots exploration projects to more advanced stage exploration projects. We have 2 projects in particular, Falcon Point, which does host an NI 43-101 inferred uranium resource, and our flagship project, the Moore Uranium Project, which is really the crown jewel for the company. There's a small high-grade zone of uranium mineralization at what's called the Maverick Zone. We found high-grade uranium at what's called the unconformity, pods of uranium along strike at about 260, 270 meters vertical depth, which is actually relatively shallow for Athabasca Basin deposits. We just started a summer drill program, so that's where you're going to see lots of the news flow coming out over the next several months, a minimum of 3,000 meters of drilling. And what's exciting about this drill program that's just started is it's really our first shot at trying to make a new discovery on that project in what's called the basement rock. So underneath the sandstone covers the more shallow areas. There's the basement rocks, which is where some of the highest grade and most recent discoveries like NextGen, like Fission, like the Griffin deposit at Denison's Wheeler project have been made. So we now have the targets in the basement rock, and we're going to be drill testing those targets, looking to find a bit deeper but higher grade and larger deposits at depth.
We've spoken about Azincourt Energy on this program before. Tell us about your partnership with them.
Yeah, so absolutely. So Azincourt's one of 2 option partners we have. We, in conjunction with our main strategy of finding new high-grade deposits, uranium deposits in the Athabasca Basin, we do employ as a secondary strategy prospect generation. So we have projects that we will basically incubate, if you will, and advance them to a stage where a larger company or another partner will come in and option in on the project. So we've done 2 such deals in the last year and a half, one of which with Azincourt. They are going to be planning to drill what's called the East Preston project. This is over by Fission and NextGen on the west side of the basin. You saw some recent news on that. So they're planning for a drill program later this year, early next year, to explore and drill test targets that they found on that property. The terms of that deal, it's essentially a 3-year deal. They have to spend $2.5 million, so fund $2.5 million worth of exploration over those 3 years, pay $1 million in cash payments, and they've issued some shares. We have another option agreement with a much larger major company and strategic partner, industry leader Orano, previously known as Areva, which is a large nuclear and uranium mining company out of France. So we consummated that deal in early 2017, and Areva, or now Orano, can earn up to 70% at what's called the Preston project by spending a total of $8 million over a 6-year period. So they've just finished a drill program earlier this year with results pending, and they are planning additional exploration programs over the next 12 months as well.
You know, for France being a left-of-center country, more or less, they sure do lead Europe and the United States with regard to nuclear energy, clean energy.
France is a perfect example of a developed country that's been able to generate lots of clean electricity. Over 70% of the grid is CO2-free from nuclear energy. It brought their electricity costs down, their emissions down. It's a perfect poster child, if you will, for the benefits of nuclear, especially for some of these developing countries. And again, we talk about the growth in demand globally in nuclear. It still very much is a growth story in parts of the world like China, like India, like the Middle East, places where they're building new nuclear reactors, large nuclear reactors that consume a lot of uranium on an annual basis. There's 56 reactors currently under construction, over 450 operating, and hundreds more in the pipeline, right? And so, you know, we don't really think about nuclear, hear about nuclear as much as a growth story in the Western world, but in parts of the world where billions of people are coming up potentially into the middle class, that's where nuclear is a growth story. They need a lot of electricity, and they need clean electricity.
Is that why, in your opinion, we've seen more interest in uranium when there's other factors involved that we've discussed before, as in the self-regulation of the supply and price of uranium and the cutback in production meant to increase that price?
In particular in the U.S., right, if we look at what's happening right now in the USA, where you have almost 20% of the country, 1 in 5 homes powered by nuclear, and a large amount of the grid continue to power by nuclear going forward, the issue in the U.S. is that most of that fuel, most of that uranium is sourced internationally from non-domestic sources. The U.S. only produces less than 5% of its annual consumption of uranium. So that's where you've seen this petition 232 and the subsequent investigation that's underway to try to source more uranium domestically. Now, the issue, however, is that the price of the commodity, the price of uranium, is still unsustainably low in the mid-20s. Most mines globally do not make money at $25, $26 uranium, where the current spot price is. The average global cost of production all in is over $40 a pound, and the price needed to incentivize new builds, new projects to come online is $60 a pound. So it's one thing to say, okay, yes, we want to source more uranium domestically, but these miners still need to be profitable, and they simply can't be at the current prices. So a good example of why prices need to go higher to meet that current demand and growing demand, especially in the developing world. We're going to need to see that price move to bring new production online, and even to keep current production online. And you talk about these recent supply cuts, that's a big talking point right now. We're in 2018 likely only going to be producing around 130 to 135 million pounds of uranium. Well, global demand this year is projected to be about 190 million pounds. So significant supply deficit there that'll have to be met by secondary supply. There's been a lot of talk of inventories of uranium out there. There's always a lot of inventory of uranium out there. A lot of governments do mandate it. How much of that inventory is mobile? How much of it can come into the spot market? And there's not a lot of it that can. So we're starting now to see upward pressure on the uranium price as a result of this. The supply cuts out of Cameco and out of Kazatomprom, the two largest producers of uranium globally. But we're also now seeing new buyers coming into the market. We've seen this fund, Yellow Cake, just recently raised $200 million in London to buy 8.1 million pounds directly from Kazakhstan, the largest producer of uranium globally. They have an option to raise and buy $100 million more each year for the next 9 years. Again, that's $100 million going forward each year, assuming they do that. That will be bought by them and not sold into the spot market. And you have large producers like Cameco that have guided that they're going to be going into the spot market, and they're going to be buying material in the spot market and selling it into their long-term contracts. It's actually more profitable for them to do that than to produce from some of their large mines. They just shut down McArthur River, which is the world's largest, richest uranium mine in the world. It's a relatively low-cost mine, and again, that just shows you how unsustainably low these prices are when they have to shut down mines in the lowest cost quartile of the industry and actually go and buy material in the spot market. As we say, they're essentially doing a share buyback or a normal course issuer bid on not on the shares of the company, but on the commodity that they actually mine. So we're seeing a confluence of factors working together to drive higher uranium prices, and higher uranium prices translate to higher share prices for the uranium miners.
Speaking of which, what can we look forward to with regard to Skyharbour over the next 12 months?
The big one on the near term is the drill program that's just started. So again, minimum 3,000 meters testing basement hosted targets. We will have updates and results out over the coming week. As an exploration company, that is the main catalyst. There is the exploration programs and drill programs planned by our partner companies, as we talked about, over on the west side of the basin, as they're earning in 70% both Orono and Azincourt. So we have news out on our drilling and our results, but we'll also have news out on our partner companies' exploration programs. We are looking to bring in other partners on some of our other projects as we continue to execute on that prospect generator strategy. We have 3 other projects, Falcon Point, Yurchison, and Man Lake, that we own 100% of, that we're talking with other companies on right now. And then in the new year, we are looking to put out or issue a maiden NI 43-101 resource estimate at our flagship Moore project. So once this current drill program is complete and we have the results back, we will then look to put out a resource estimate, which will be a pretty significant milestone for the company. So lots of news and catalysts on the horizon to hopefully complement a rising tide in the uranium market.
Well, Jordan, we sure do look forward to the news. Thanks so much for joining me today in the program.
Thank you. Appreciate it.
I've been speaking with Jordan Trimble, President and CEO of Skyharbour Resources, trading as SYH on the TSX Venture Exchange and SYHBF on the OTCQB in the U.S. For the Ellis Martin Report and Skyharbour Resources, I'm Ellis Martin.